Hello and welcome to episode 51 of Mo Money, the investing and economics show for millennials by a millennial, where our goal is to educate, entertain, and empower a new generation of investors. I am, of course, your host, Mr. Smooth Like Butter on Toast, MC Mo. Let's get this show on the road. Now, as you get older, you realize one thing. People kind of suck. And there are a lot of shitty people that you just don't want to be around anymore. When you're a kid, everything's awesome. You have like 20 best friends, nobody really has a personality, you're just a kid running around. The older you get, the more you realize there are some people who make you go, whoa, I would literally do anything to have the fact that you even exist erased from my memory. You are the worst human being ever. Please stop breathing the same air as me. As per usual, you're probably wondering, MC Mo, where the hell are you going with this? I'm here to tell you that when you enter into the world of investing, it is the exact same way. It's basically like high school. There are tons of different cliques, and depending on your personality, you probably fall into one of these cliques. Now, let me introduce you all to the 6 people you meet in investing. That's one more than you meet in heaven, because as usual, we always do things a little bit better than everybody else. The first people that you're going to meet are the bulls. They're like kind of the cool kids. Bulls are people who are optimistic about the health of the economy, the stock market, or just one stock in particular. That's the reason for the Wall Street Bull. It represents resilience of the stock market and the economy. So whether you're on Twitter, you're reading a newspaper, you're watching CNBC or the news, you will run into a lot of people who are bullish or generally optimistic about the stock market. These people are generally usually the loudest. Now, obviously, a large part of the economy and the stock market is based on the actual functioning of the markets, i.e. things being produced, services being performed, people having jobs, people spending money, etc. But another factor in the economy and in the markets is an intangible, and that intangible is confidence and perception. This is the reason why most of the people who are bullish and optimistic about the general state of the economy and the markets are the ones whose livelihoods depend on its success. These people, including the Federal Reserve, politicians, bankers, CEOs of any company, anybody who has any skin in the game. The Federal Reserve is in charge of making sure that the markets are stable and functioning properly. If they say, oops, I think things may have gotten a little out of control and we can't handle them, that's like being in an airplane and hearing your pilot go, oh shit. The market would freak out. Thus, the Federal Reserve is generally full of optimistic statements. Even when they mention something bad, they generally try to frame it so you see it through rosy lenses and just say, it's under control. Politicians are the same way. If their or their party policies are in place, they cheerlead the hell out of them and manipulate the data to be like, hey, look how good everything is. When Trump was running for president, he said the stock market was a giant bubble and Obama has pretty much left us fucked. Now he's president. And now the market's great? Nothing has changed except the person who's the president. So Trump, which is it? If banks and CEOs warn of bad things to come, it'll become a self-fulfilling prophecy. People will start to save money, they'll sell their stocks to get out before things get really bad, banks will stop lending money, and that bad thing will have arrived, even if it was by an accident. Those are the bulls. The next group of people that you're going to meet is the bears. Did Chicago name their sports teams after Wall Street lingo? Maybe. It's just a theory. Now, bears are on the opposite spectrum of the bulls. They have a generally pessimistic view of the market, the economy, or just one stock. Okay, these people, like the bulls, are people that have skin in the game somehow. So you'll have guys like Peter Schiff, famous bear, predicted the housing crisis years in advance, has a great podcast. He's generally pessimistic about most major stock markets. He feels they're in a bubble, so he owns gold as protection for his money. So that's his angle. Jeff Gundlach, I think that's how you say his name. He has a sort of financial Twitter Donald Trump just going on rants against people he doesn't like, including the media for trying to, perpetrating fake news about him and his company. He's another notable person who's very bearish on the market. Then you have guys who are bearish about individual stocks, like Jim Chanos. He's a wildly successful hedge fund manager who's bearish about Tesla. Bill Ackman, another big name, bearish about Herbalife. They've made a documentary called Betting on Zero, which is on Netflix, all about his bearishness on this one stock. Andrew Left is another name known for being bearish on companies. Zero Hedge is a popular financial media outlet which generally has a very bearish stance within their articles. These are the names that you generally hear mentioned in the world of the bears. Kind of like Goldilocks, bears are all different in terms of how pessimistic they are and what about. Those are the bears. The next type of people that you'll meet are alternative investors. They're like the hipsters of the financial world. You know, they really don't invest in stocks and stuff like that because that shit's too mainstream, man. Right now, the hot trend is like digital currencies. Bitcoin, Litecoin, Ether, whatever. But other things will be like investing in real estate, which isn't too hipster, but depends on your age. REITs, which are like stocks of real estate, are alternative as well. Fads like Beanie Babies and stuff like that, you'll see these people talking about these alternative investments, different places, and how you can make much better returns than you can in the stock market. Now, the stock market is a sucker's game and blah, blah, blah. In my honest advice, these are people worth avoiding. They're harmless if you just listen to them and kind of laugh at what they say, but they're dangerous if you actually act upon their advice. It's just funny to see what they're pitching next. The fourth type of person you'll meet, or most likely will come and find you, are the get-rich-quicksters, aka frauds. These people are, or seem like they should be, easy to spot. Most of them are young, like 18 to late 20s, and they're just posting pics of cars, money, women, beaches, you know, typical fuckboy stuff. Most of the time the pics aren't even theirs, they're just something they find off Google, and they always have some stupid, non-inspirational quote underneath, and then something like,
"Let's get this money, follow and DM me to find out how."
These guys are snake oil salesmen. Most pitch trading rooms to teach you how to day trade like them and make money from home. All you gotta do is give them $250 for a year-long subscription. They post fake testimonials. They're scam artists. There are others who want you to subscribe to their $250 newsletter. Every day they'll send you texts or emails about the hot stock that they're buying. Little do you know, McDouchington fuckface already owns a big share of the stock. 9 times out of 10 is some tiny penny stock that they can buy a shit ton of. Once subscribers buy it and pump up the price, Mr. Fuckface dumps his shares and makes money, and everybody else loses. Why should you avoid these guys? You don't see Icon, Buffett, or guys like that selling subscription services to try and help you get rich. If someone makes their money by teaching you, most likely they're a fraud. If they need you to sign up so they can make money, fraud. It doesn't matter if they say they made millions beforehand and they just want to give back out of the kindness of their hearts. Wrong, they're a fraud. If you're looking to get into day trading, you must follow @GuruLeaks1 on Twitter. The account exposes these people on a regular basis. It's good if you're seriously looking to get into day trading for whatever reason. I don't know why. The fifth type of person you'll find yourself meeting and investing are the bold predictors. For instance, the book Dow 36,000, written in 1999. The Dow was at 11,000 around the release. By 2002, it was down to 7,300. The 11,000 level was not seen again until 2006. Even now, after one of the longest bull markets in history, the highest we have been is 21,999. So 36,000 is still a lofty goal for the near future. You also have guys like Dennis Gartman, a name known for sensational predictions. Early in 2016, he said he wouldn't see oil above $44 in his lifetime. Within months, it was above that. Economist Paul Krugman once said the internet will have no effect on business, but these guys always come back with something crazier, and people still want to hear it. You know they're crazy, you gotta know what they'll say next, and when they say it, everybody talks about it. It's annoying, these guys just want the attention, but their advice is nothing worth listening to. The sixth and final person that you'll meet and you'll hate are fake heroes, real zeros. These people are the people who just want so badly to be liked and validated and popular. They're pikers. Most of them don't do any real trading, and if they do, it's much, much less than they brag about actually having. They'll post pictures showing some huge profits in paper trading accounts, aka play money, that's designed to teach you how to invest. Some will post no photos, they'll just talk a big game for attention. If they claim something is going up and it doesn't, then they'll backtrack and erase the tweets. If it does go up, then they'll brag about it nonstop. These people you'll find on Twitter, on Reddit. If you talk about investing at a bar, some dumbass will chime in talking about how he bought Amazon at $50 10 years ago or some other bullshit like that. These guys are losers. Just shove them in the nearest locker, give them a swirly and a wedgie, and ignore them. Bottom line, in investing, there's a lot of noise, a lot to mentally deal with. The more you get into investing, finance, economics, etc., the more different types of people and views you'll run into. There are a lot of people and there's a lot of money out there to be made. Everybody has their angle, everybody has their statistics to back up their angle. The key is not to get too entrenched and turn into just one of those types of people. Nothing wrong with listening and being open-minded. Doesn't mean you need to act on everything that everybody says. It's important to know who you are as a person, to be mentally strong, and to know what your goals are for investing. Otherwise, you'll surely just get lost in the sauce and fucked up in the game. But luckily, you'll have me to help you out and teach you along the way. Thank you so much for watching another episode. You can find new and classic episodes right here on YouTube. For now, don't forget to like, comment, subscribe, share, follow me on Twitter, follow me on Instagram, like me on Facebook. Check out themomoneyshow.com. Mo Money, signing out.
Look at me.